One of Malaysia's behemoth planters, Felda Global Ventures, has confirmed that it has decided to withdraw its roundtable for sustainable palm oil or RSPO certificates. FGV says the withdrawal would be from 58 of its palm oil mills starting today. It did not give a reason for the withdrawal. FGV stresses it still remains an RSPO member and is committed to the organization's principles and criteria. FGV is one of the founding members of the RSPO. Earlier, fellow planter IOI Corp had its RSPO certificates suspended, which led to MNCs such as Unilever, Colgate-Palmolive and Johnson & Johnson announcing that they would stop sourcing for palm oil from the group. The APF has shrugged off concerns about its investment in 1MDB's 5 billion ringgit sukuk. This is despite the state fund having missed a $50 million interest payment, which in turn triggered cross defaults on 2 of its other bonds. The EPF holds 200 million ringgit of the sukuk. That's 4% of the total issuance, which is why CEO Shahril Rizwan says they're fairly fine with the exposure.
In any event, if there's any major problems with 1MDB, the government will step in basically to cover the debt to all the bondholders.
He says the EPF will only make a move if and when the trustees deem there is a cross default and whether they have to bring the matter to bondholders. Ambank's biggest shareholder, ANZ Banking Group, saw its first half cash profit plunge the most in about 6 years. This was because of bad loans and impairments, including a 260 million Aussie dollar write-down on its investment in Ambank. Cash profit for the 6 months to March was down 24% to about 2.8 billion Aussie dollars. It cut dividends for the first time in 7 years. ANZ holds a 23.78% stake in Ambank, a stake that it's reportedly looking to let go, partly due to the Malaysian lender's link to the 1MDB scandal. Ambank closed 1.1% lower to 4.48 ringgit today for a market cap of 13.5 billion ringgit. It's scheduled to announce its FY16 full-year earnings this month. Hibiscus Petroleum has called off its courtship of Australia's Hydra Energy. The country's first and only graduated SPAC is not going to buy the exploration company, as certain conditions in the term sheet were not fulfilled before an April 30th deadline. Hibiscus had planned to buy out Hydra Energy by issuing new shares for a price to be determined. It says it doesn't have to pay the breaking fee of $3.5 million, nor does it foresee any material financial impact from the termination of the deal. The acquisition would have boosted its global proven and probable reserves by between 15 and 17 million barrels to 47 million. Hibiscus closed 2.6% lower at 18.5 cent, which works out to a market cap of 215 million ringgit. Plantation player Kulem Malaysia will be taken private for 2.2 billion ringgit, crossing the final hurdle after getting the green light from 99.59% of its shareholders. It should be delisted by the third quarter of 2016. To recap, Johor Corp, which already owns 62% of Kulem, had offered 4.10 ringgit per share to take over the company. A pretty generous offer, considering the stock had been trading between 2.46 ringgit and 3.49 ringgit prior to the offer. Kulem chairman Kamaruzaman Abu Qasim says the deal would provide shareholders the opportunity to realise the investment with a good return.